Most Americans never learn this. Banks create money out of thin air. Before the U.S. became a global superpower, a secret system shaped every dollar you hold. This one legal framework determines wealth, debt, and opportunity for every American today. Imagine giving someone a blank check legally and calling it banking. That's the U.S. system. Millions trust banks daily, unaware that the rules favor them more than the average citizen. Banking in America started small, with colonial lenders in dusty towns offering credit. Early Americans borrowed against crops and livestock, building the first fragile credit system. The government slowly realized controlling money meant controlling power over ordinary Americans. In 1792, the Coinage Act standardized currency, but paper money would change everything. Private banks grew, often more influential than local politicians in shaping communities. By the mid-1800s, banks were expanding rapidly with the railroad and westward migration. The gold rush fueled wealth but also exposed banking's fragility and wild speculation. Banks loaned far more than they held, betting on future deposits that often never came. Panics erupted, leaving towns empty and families destitute in cycles of boom and bust. Americans demanded reform, fearing the invisible hand of finance could ruin lives overnight. In 1913, the Federal Reserve was born, giving the government control over lending and currency. It promised stability but also created a system where money could expand almost magically. The 1920s Wall Street boom showed both opportunity and the dangers of unchecked credit. Then came the Great Depression, wiping out savings and proving banks weren't infallible. Americans suffered, yet laws allowed banks to keep operating while families lost everything. The 1933 Banking Act created protections, but also cemented legal privileges for financial institutions. Banks could now lend multiples of their reserves, under government oversight but for profit. Credit became the lifeblood of the American dream, from homes to small businesses. World War II further expanded government-backed banking and global U.S. economic influence. By the 1970s, the dollar's role on the world stage would be cemented forever. Nixon ended the gold standard, freeing the dollar from physical limits and reshaping banking. Suddenly, banks could create money almost entirely through loans and deposits. The Federal Reserve's policies now directly influenced everyday costs for Americans. Interest rates became a tool, controlling inflation but also impacting mortgages and wages. The rise of credit cards in the 1980s made debt accessible, even to those with modest income. American households learned to rely on borrowed money for living, education, and survival. Banks legally profited from this system, collecting interest while creating new currency and loans. During the 2008 crisis, millions lost homes, yet big banks were rescued with taxpayer money. It was a stark reminder: the legal system protects banks first, citizens second. Student loans became another way the system generates money, tying young Americans for decades. Rising rents and stagnant wages amplified the pressure, showing systemic financial imbalance. The dollar dominates global trade, meaning U.S. banking policies ripple worldwide. Every decision at the Federal Reserve can affect the price of gas, groceries, and homes. Banks shape inflation, but Americans often feel the pinch without seeing the mechanism. Middle-class families watch as wealth concentrates, while their buying power slowly erodes. Credit scores dictate opportunity, tying legal money creation directly to personal lives. Mortgage interest, student loans, and car payments feed into the invisible machinery of banking. Americans save, spend, and borrow, unknowingly participating in a system built for profit. Financial literacy becomes survival, but schools rarely teach the rules of money creation. Banks now operate globally, yet their effects are most felt on Main Street, not Wall Street. Every family navigating debt, every student loan default, fuels a legal system that generates more money. Banks profit legally from the economy's constant motion, turning everyday life into currency. Homebuyers face rising costs as banks lend more than ever, inflating property values. Young adults delay milestones from marriage to buying homes, trapped by systemic lending. Retirees watch savings shrink under inflation, a side effect of legal money creation. Middle-class Americans juggle debt, often unaware how laws allow banks to earn endlessly. The average family's credit cards and loans are small pieces in a massive financial engine. Even small decisions, like a 0.25% interest rate change, ripple through communities nationwide. Banks leverage these policies, profiting from both borrowers and savers simultaneously. Americans witness booms in the stock market, yet daily expenses rise almost unnoticed. Legal structures protect banks, allowing risk-taking without full consequences for losses. Yet opportunity exists for those who understand the system, shaping their wealth strategically. The money Americans earn, save, and borrow is deeply intertwined with a century-old legal framework. Financial literacy becomes power, unlocking control over decisions banks otherwise dictate. Citizens who grasp credit, loans, and inflation gain agency in a system designed to favor institutions. Transparency remains limited, keeping many in cycles of debt while banks quietly profit. The system is not inherently evil, but requires awareness to navigate successfully. Families can thrive with knowledge, budgeting, and careful borrowing, even in this complex environment. Legal money creation touches every life, from payday loans to retirement planning. Students learn late that tuition, loans, and interest rates are all parts of a massive financial engine. Homeowners discover that mortgage laws and interest policies often favor lenders more than buyers. Young professionals inherit debt burdens that define financial trajectories before full careers even start. Retirees face challenges as inflation and low-interest policies impact savings unpredictably. Middle-class Americans must balance risk, investment, and borrowing to maintain economic stability. Even small financial decisions resonate through decades due to how banks create and control money. Yet there is hope. Knowledge empowers families to make decisions that reduce dependence on banks. Financial literacy becomes an act of self-defense in a legal system favoring institutions. Transparency, awareness, and strategic choices allow ordinary Americans to navigate the invisible banking engine. Understanding these laws can transform fear into confidence and confusion into action. The system is intricate, but not insurmountable for those willing to learn and plan. Every dollar earned, spent, or borrowed connects to a web built over centuries. Power lies in understanding, not just surviving, the legal framework of U.S. banking. The story of American money is not just about banks, but about every citizen's life. History, law, and policy converge to shape the opportunities and constraints of every American. Wealth, debt, and security are intertwined with a system most take for granted daily. The future belongs to those who understand the rules hidden in plain sight. A financial system that seems mysterious is actually a set of laws and choices anyone can learn. Knowledge is the ultimate leverage in a world where money is created legally, invisibly, constantly. Final message. Understanding the legal system of banking empowers Americans to protect, grow, and reclaim their financial future.